Oh, people, welcome to the Stock Market Brief Show. It's been a day. Had to crack open a little high noon. I'm getting a little bit late to the recording, but we're still going to be doing it. You're watching the Stock Market Brief Show. We're going to be talking about all kinds of things today. We're going to be showing up a little bit of Tesla. We're going to be following up on some Apple and much more. Give you some gamma exposure levels, the daily expected moves, and we have some big macro reports coming out. So we got to see what the market's pricing in for tomorrow. And that's about it. We're going to go ahead and really get right into today's episode. Now, this is the swing trading. There's a link in the description below. It's my Patreon group. It's only $9 a month, or you can sign up for annually and save some money and you get access to all this stuff. That's all I'm going to have to say about it, but I will be showing you some of the stuff that I post in here. So today I posted already my daily expected moves in zones, and that is going to be something that I want to actually show you what it is that I'm seeing, kind of how I might utilize the tool in today's episode. Now, if we take a look at the 11 sectors that make up the S&P 500, healthcare, financials, industrials, consumer staples led the way. Energy was the one that got hit, and down there with tech. Tech has been kind of brutalized so far, but overall the indices rather flat on the day, right? They were up some and then they were down some, right? So they bottom to buying, selling to selling. That's what we get in a negative gamma territory, which we discussed more yesterday. Now, tomorrow we do have some big data, non-farm payrolls. That comes out 1 hour before the market opens up. And then 30 minutes after the market opens up, we get ISM services PMI. Now, these things, and obviously unemployment rate and all those as well, but these type of events, they can very well add a lot more market volatility. The market's been on pins and needles, so this type of stuff will really add to the volatility. So if you're trading intraday, it's going to be important to just know when the time comes. Now, one thing about these reports, okay, we can dig into the reports. We can look at what consensus is. We can see what the actual is. But here's the reality. If you are trading into one of these reports, you will lose all your edge. And that's just plain and simple because it's very binary and you're going up against high frequency trading, okay? HFTs, high frequency traders, algorithms that will blow you to smithereens. You might catch a few, but the time that you don't, if you're overextended on one of these trades intraday, it can just tear you to shreds. So you can do a couple of things when you have these type of reports come out. You can wait and just, let the market digest. You can apply an anchored VWAP to the candle when the reports released, and you can see how price moves within those areas. Now, as we're getting these data, the market's already adjusting its volatility. And what I mean by that is if we look at implied volatility, this was yesterday's implied volatility. This is what I mean. I'm going to show you the daily expected moves. This is what that sheet looks like, the daily portion of it. This was yesterday's daily expected moves, and you can see the upper level was at 47.28 for the SPX, 471.31 for the SPY, and yes, we did come up and we found some resistance right up at those levels. Now, take a look here at the expected moves. Now, these are plus or minus, right? So it means the market could go up this much, down this much, and that's based off of implied volatility in the options market for the various assets. But what you'll notice here is take a look at SPY. It was 2.52. And now look at what we're doing. We're going into 3.11. So as you notice, we're coming into a big report. The volatility is widening and the market's telling us that. And then we get our specific level. So if you want to screenshot this, you can see the upper level, the lower level for SPY. You got the Qs, the IWM, and then you get SPX and a couple other ones in there too. I even include the two sigma levels, the upper and lowers, because you never know. If we get a very unexpected type of report, those could be some levels to pay attention to. Now, when we do get the report drop, it's going to be pay attention to what happens with the federal funds rate, the probabilities. And as it stands right now, the market is basically pricing in 6 rate cuts in this year, right? We got 1 rate cut, 2, 3, 4, 5, and 6 starting in March 20th. So right now, when you see a 25 basis point cut, there's a 62% probability as it stands. However, depending on what the report sees, and there may be adjustment that's done. So if perhaps the market sees the report and says, you know what, actually, there's no reason for the Fed to cut rates. And this all of a sudden starts to turn blue up here, or this drops down to 40, 30, whatever the case is, and you get a higher probability in this area. It could be complete opposite. We could see this potentially increase or this potentially increase, really slating in that the federal funds will be cut in the March meeting. Okay, if we take a look at the 10-year yield, the 10-year yield was up pretty nicely today, up 2.15%. Now, this move up has been probably contributing to the market's recent sell-off to start the year. And we did get that price percent oscillator crossover as it stands right now. So this bullish crossover, we talked about those, that could potentially mark a potential change in trend where this continues to head up. If that is the case, we could potentially still see some more market, obviously, volatility. The dollar is also still continuing to kind of squeeze out of this rising wedge pattern. So this is one of the stronger performing assets in 2023. And we talked about that on the opening video of this year. We said these are the two assets to really pay attention to, because if they start moving up, especially together, what we've seen in the past is that the markets, they do this, right? The dollar breaks down, guess what goes up? The S&P 500. Dollar breaks up, guess what goes down? The S&P 500, and then so forth. We fell pretty hard here, and we fell pretty hard, obviously, in the 10-year yield. And what happened? We had ourselves a monster rally into the year end. If we take a look here at the SPX, this is the daily expected moves from today that were posted that I previously just showed. You can see we came up to the daily expected move, and this was also happened to be some important gamma exposure levels. Remember, we talked about it's likely to see a potential bounce, but be aware the 5-day moving average is declining, and then we kind of rolled ourselves over and we closed at about the low of the day. If we take a look tomorrow, we are still outside of that weekly expected move. The daily expected move is actually basically at the upper weekly expected move. And then I'll be going over kind of what may happen to tomorrow, given some oversold signals in this short period of time. But like I said, the report itself, it's pretty binary, and they could really set the market moving. The lower daily expected move is at 46.58. If we continue on, you can see that the SPY, came up. And we tagged the year-to-date anchored VWAP, and we talked about how that was declining, and it held as resistance, and it held as resistance again and got pushed away. So one would say, hey, if we can get above that, that'd be a positive step in the right direction. And then we need to see the 5-day moving average start to curl over. So once again, two things that the bulls need to be patient for. They need to be patient for a inclining 5-day moving average, and we need to get back into positive gamma territory. So if you are a breakout trader, right, like you play various setups like that, like I do, doesn't mean that they don't necessarily work, but I've seen a lot more breakouts fail. You'll just get fake outs, boom, or they'll, continue to move down, or whatever the case may be, more volatile when we're both in a declining 5-day moving average environment, and on top of that, in a negative gamma territory. Okay, if we take a look at the gamma levels, where can more selling really take place? Pay attention to a couple of strikes here. You can see these gamma levels are getting a little bit bigger, and that's down there at 4650 and 4600. So we really haven't seen too severe of selling whatsoever, but if we really start breaking down these levels, these ranges, where I think more volatility, more, significant selling could take place after what we've seen as far as that large run-up goes. Now, as far as local support, local resistance go, we're closed right at around that local resistance at 4,700, but I'm going to look up to 4750 and call that the local resistance, and 4665 on the SPX, and I'm using OA and DA if you're pulling it up on TradingView. This is a continuous, so you get to see it kind of continuing, whereas you could add these levels on the SPX, but when you have the continuity here, it makes it a little bit more clean, and that's why I'm once again showing you on this. The gamma flip levels over there at 47, I think 25 as it stands right now. Look, we got above that 5-day moving average, but it was declining. We talked about that, right? Be careful. And then we came up to the gamma level and we got pushed back down. So you never know. Something could happen where we start to curl over and we start to go on a little rally, and I'll explain why that may be. We can look at the weekly time frame, and we'll follow up the weekly EMA, the 5 EMA. It's flat, right? But it's still technically inclining over here. It's at 46.8844. We closed at 46.8868. We are still above it. Excuse me. Coming off of a little cold. And we're down 1.7% on the week. So if we're going to bounce, this could be a potential good area to bounce. It's hard to say coming into the report, but that's where we stand at this current moment. If we take a look at the NDX on the daily time frame, we have a I don't even know what you call this. It's the opposite of a. My brain is so foggy right now. You can get hanging man candles, right, where price action goes up, and then when you come down like this, or even like these type of movies like this, it's like a hammer candle, but what it does is it marks a potential reversal, even when it's upside down like this. For some reason, I'm drawing a blank on what the name of this particular candle is, but it can mark turning points, but you got to wait for the high to be taken out. It basically shows us, yeah, the bulls did show up today, but the bears kind of finalized it. So if the bulls show back up, it could be a very, bullish sign. And all we're doing is getting really just a pullback within that overall uptrend. And we're above those rising moving averages there too as well. Now, if we take a look a little bit more granular at the cues on the 15-minute time frame, you can see there is a clear trend that's been kind of holding as a level of resistance. And while we're kind of just pushing down slower and slower, we're below the declining 5-day moving average, you can see that we are getting strength here in the price momentum oscillator, and also we're getting higher lows in the RSI. So as price is kind of sailing down, we get a little flush out over here. I wouldn't be too surprised to see some sort of snapback to eventually test the declining 5-day moving average in the near future. And as you can see here, the bullish percent index for the technology sector, we had that negative divergence, right? The RSI is showing a negative divergence. And guess what? It started to play out, and now we're moving into that oversold condition as it stands. So we'll get into a couple of tech stocks, mainly Apple, and then I'll show Tesla too as well, because those can move the markets overall. They're big names. Now, I posted this December 5th, and I made a movie of it on December 5th and talking about a lot of the big mega caps, how it could be, potentially topping pattern. We showed, two different charts. So the one of them was the distribution schematic for Wyckoff events and phases. And it wasn't just Apple that I showed. I showed also like NVIDIA, where we saw the buying climax, the up thrust, and then as you can see, as time has progressed since the last time I posted it, we're getting actually that up thrust after distribution that's looking honestly pretty similar to the schematic here, but we just haven't had the follow through to the downside. Now, the Apple chart I posted was right here. Okay, this is when I posted it, and this isn't to like pat myself on the back. This is more comical than anything, and you could see the trailing. I've been posting it up on X. Here's the updated chart, right? We pulled back, and I haven't made any changes to it. We had our up thrust breaking through this prior buying climax high, and just take a look at the downfall. Now, I'm showing you this because, if it's going to follow this schematic to a D, right? We're probably close into an area where we might get that potential bounce, and that bounce could get reverted. It might not, who knows? I just find it kind of comical that it's been following it very closely. But as we're also pulling down, I wanted to just note that we are above a rising 200-day moving average. So this could potentially act as a level of support. So if Apple's going to bounce after this sell-off, it could be here very shortly. Just pay attention that we are below that year-to-date anchored VWAP. So if I go into the 15-minute time frame, not only does the 5-day moving average work on assets like this, the 5-day moving average is declining, and we're below that year-to-date anchored VWAP. But as I previously showed the RSI on the Qs, take a look over here. We also are seeing on the 15-minute chart higher lows on the RSI as price action's been going lower, and we have a pretty clear idea of a trend here that's been holding as resistance. Comes into it, and you see a couple red candles, comes into it, and you see a few red candles. So if we start breaking above that, I think we test the year-to-date anchored VWAP and then see what happens from there, but it potentially creates a inverse head and shoulder pattern to retest the declining 5-day moving average. So just so you know, I'm pointing this out because, whatever the report says, even if I knew the report and what it was going to be, I still wouldn't take the trade into it because, it's still, I don't know what high frequency traders, I don't know what algorithms are going to do when they see it. Okay. But as it stands right now, we are pretty extended. So I personally wouldn't be looking to short into this, even if it were to go down. I would want the 5-day moving average to catch up, do something like that, and break back down and then get some follow through to the downside and so forth. Wait for that consolidation, right? Now, Tesla also broke out of this, and everybody and their mother was talking about, Tesla, 300, right? It's going to be a massive move. And it might be still. But as it stands, starting the year to date, for people that played that are currently underwater, and people that bought it year to date are currently underwater based off of, the year to date anchored VWAP, right? So based off of volume. But we are still above that rising 200-day moving average. And when you look at this structure where you have this prior resistance, once resistance is broken, it can become a level of potential support. So as we're pulling into kind of this zone over here of, in confluence with the 200-day moving average and the previous breakout of this trend, we could very well potentially see a break. So where would you want to see to get a little bit more confident versus just kind of buying a dip without seeing any strength? That could be that year-to-date anchored VWAP, which would be really just the high, buying, through the high of this prior day's candle, because that was kind of tagged into that year-to-date anchored VWAP. Now, I want to show you the zones now. I wanted to kind of give you an idea of where everything stands. Now, the S&P 500. Now, first and foremost, what is the zones? The zones are pulling from an indicator originally created by Joe Catanzara. And, think of them as advanced Bollinger Bands. They're a little bit more active, and I really like them. But I really like using them kind of in this way where I extract bulk data from it so I can get a good fractal view of the market and see where things might be hitting the lower end of their zones or the higher end of their zone. I just call this sheet the zones, but the indicator that he created was based off a book called The Misbehavior of Markets by Benoit Mandelbrot. And the indicator itself is called the bridge bands. Now, the last time that the S&P 500 was actually down this low was over here. Now, if you're in the Discord, this is why I'm showing it, you can see zones for 1026. That's when the S&P 500 was about that low. And we've been on, obviously, a monster rally. I don't have the daily chart of the S&P 500, but that was pretty much the low of the S&P 500. Doesn't necessarily mean the same thing's going to happen, but going back to my point here, we are reaching towards the lower end. The lower end has been flattening out, and that's important to note. It hasn't been falling. It's more flat than anything. So, we have minus 0.22% to the downside, potential 2.5% to the upside. Now, the market report's going to be coming out. Like I said, it's binary. Maybe we blast right down to the downside. But if I keep going through the list, you can see even high yield, right? This is what I mean by the fractal moves, where you see the S&P 500 down to the low end range. Well, what's at the upper end? Well, look at the VIX. Volatility is towards the higher end. 10-year yield up at the higher end. The dollar up near the higher end. And as those assets are moving, what's at the lower end? High yield, right? Bonds more towards the lower end. This is not necessarily an area what I want to short. TLT, right? Down towards the lower end. We have silver, SPY. The Qs are basically at the lower end. WM, right? XLY, we're outside. We're trading outside of the lower range right there. Take a look at XLK, right? We talked about XLK moving into oversold condition here. Well, now over here, we're currently outside of those bands there too as well. Not necessarily the place where you'd want to jump in short, but it's just something to be obviously mindful of. Okay, if we continue on, this is this entire document. These are the visuals. I also give the hard numbers in a PDF document too as well. But semiconductors, we have retail down towards the bottom. We got, let me continue on, the S&P 100. So Apple, right? We pointed Apple out today. These are ranked by market cap. This one's at towards the lower end of the range there too as well. You have Amazon outside of it. Amazon I actually like because Amazon looks like it's just back testing a breakout. So that's one kind of on my radar. Tesla's towards the lower end there too as well. And then you could take a look at healthcare stuff. Healthcare is reaching more up to the upper ends because healthcare has been the top performing sector overall. AVGO, I think that was the one that's been just absolutely on a monster tear. So that's kind of backing off a little bit towards its lower range there. Even MRK, right? So some more healthcare names. Yeah. So I put the entire S&P 100 over here. So if anything stands out, I'll just kind of point it out. And as you go down, it's the less market cap. Now WBA, this might actually be a potential play over here too. I'd have to pull up the chart. I haven't seen it yet, but it's towards the lower end. And consumer staples. I think this is Walgreens, right? Yeah, have been decent so far, so that could potentially be an opportunity. I'd have to check it out. Okay. I do global ETFs, right? You take a look at global stuff, and then we also put in commodities. Take a look at right, boom, was up at the top end. Silver is down towards the bottom. Silver's been kind of getting brutalized, which coincides with GDX, right? Silver miners and silver, there's a very tight correlation between the two. You can see junior miners towards that bottom there too. All kinds of stuff. We have currencies, so forth, right? Look at FXY down there towards the bottom there. As the dollar is moving up, you see other currencies kind of pushing down. Just a good overall fractal view, like I said, of the markets. You even have volatility, reaching towards its upper ranges. That's all I got for you on today's episode, everybody. We went over quite a bit in a very short period of time. And China. China's also been actually some great names coming out of China too, some great plays. some that I posted in the Discord recently there too as well. That's all I got for you on today's episode, everybody. Just be prepared for that market report to come out as we're trading outside of the weekly expected move. This is where some big moves can happen. But as you notice, a lot of things are reaching to their lower end of the ranges. Things are getting into oversold conditions. And remember, crashes happen from oversold conditions, but nothing too dramatic really, like I said, at this time, until we really get to these big gamma exposure levels at 4650 to 4600 is where maybe, we get actually real selling into selling. So bulls, caution, right? Declining 5-day moving average below gamma flip level. But remember, we're still above some key levels over here that you want to be aware of if the market wants to continue to sell off. That's all I got for you. See you later.